Good morning, YouTube peoples. Creating a video on a Friday. It's always a better mood, better feeling on a Friday. Last 3 o'clock Friday for work though. Oh well. Anyway, time to get to it. The video today will be about ETFs and more so dividend ETFs and why dividend ETFs are good and why not so good. So I'm just going to cover the pros and cons of dividend paying ETFs. I guess I'll start by explaining what an ETF is. I'm sure everyone hears the acronym. You know, nowadays everything has a goddamn acronym. So ETF is exchange traded fund. Think of it as a basket of stocks. So there's tons of different ETFs available on most brokerage accounts that cover a variety of stocks, whether it be for a particular index, a particular sector, things like that. So there's plenty of options out there for ETFs. Not all of them pay dividends, but I would think the majority of them do, since they cover 50 to hundreds and hundreds of different stocks that, you know, could or could not, pay a dividend. And if they pay a dividend, they'll return that dividend to you, at least a percentage of it. So anyway, that's an ETF. Now to get on to we'll start with the pros. First is kind of obvious, as I mentioned, ETFs are a basket of stocks. So when you invest in individual stocks, you're investing in one company. Obviously, there's a risk in that. When you invest in an ETF, you're investing in about 50 to 200 or 300 companies. So I'll just say the research that is done investing in an ETF is obviously a lot less. So you're saving a lot of time, time spent through investing in individual companies. You're trusting the owner of the ETF to be doing that. You know, they should be tracking these companies and making smart decisions as the companies they're investing for. They have to, or else nobody's going to buy their ETF. So that's one, time saved. Another one is obviously diversification. As I mentioned, it could be across sectors, it could be across industries within that sector, and 50 to, I don't know, maybe 500 companies. I'm not sure if there's a cap, but you're automatically diversified from day one. When you invest in an individual stock, you're all in on them. Could be good, could be bad. When you invest in this ETF from day one, you're all in everywhere. A lot more secure. So one company goes down, you don't really care. You don't really feel it. You care a little, but not as much as if you lost everything. Another good feature, as I mentioned, diversification. But it's a cheaper way to diversify if you think about it, because if you want a piece of the bigger companies, the Amazons, the Apples, the Teslas, this and that, the individual stocks are expensive, and forget it. You can't, just to buy one Amazon now is over $2,000. I mean, come on. We're broke investors. We can't be doing that. You know how long it takes to save $2,000? Forget it. But if you want a piece of Amazon or a piece of Apple or a piece of Tesla, you can find a stock that is, within their sector, and they're more than likely covering that stock. They more than likely own those stocks along, again, with many others. So again, it's a cheaper way to get a piece of a stock or multiple stocks that you wouldn't likely get an opportunity to investing in individually. And another benefit, as I mentioned, I kind of mentioned it before, but no single company can really hurt you. Again, I'll say it a million times probably this video. With an ETF, it's spread amongst multiple companies. You're not tracking those companies yourself. So if it just so happens one of those companies goes bankrupt, it's not going to hurt you as much. I mean, the owner of the ETF will, should be doing the due diligence and managing this and hopefully selling that stock before that happens. But again, the stocks go up and down. If the stock's, running out of money, going out of business, the point is no one or two companies are going to break you. And that's what you need, especially in the beginning. You need security because you don't know what you're doing. So, another advantage of the dividend-paying ETF, again, my strategy, invest in stocks that pay dividends. Live off those dividends. The idea is to never sell a stock. So I want to invest in companies that I don't want to sell, ever. And I don't want temptation to sell. When you're in an ETF that pays a dividend, you're never going to get tempted to sell. I mean, this stock, typically there's not a, huge fluctuation in price normally. So you're not going to look at the stock and be like, oh shit, I'm down huge, I got to sell. Or you're not going to hear news about one particular company and say, oh man, everyone's selling, I got to get out. You're going to invest in that ETF, you're going to leave it, and you're not going to want to sell because you're going to just worry about collecting the dividend. So again, that's a good one, because especially in the beginning, I think people associate investing stocks with risk, and they think one bad thing happens, it's over. So they jump on it and sell. As a dividend investor, you don't want to do that. Again, capital gain is not as important as dividend gain. Dividend is your income. You want the dividend to go up. Don't be worried about the capital. But with an ETF, you should definitely not be worried about the capital. Another good thing, again, when you're first starting off and you're investing in ETFs, you're obviously trying to save money to buy more ETFs, right? When you're investing in individual stocks, you have to worry about what stock should I buy with this money. When you're investing in ETFs, you probably don't have that many, so you're just okay, boom, done, buying this ETF. It's not, it's just, you only have to worry about buying the ETF, not, which one to buy, because more than likely you're not going to be in that many ETFs, because they're well diversified in itself. So you just put the money in, you buy the ETF. That's it. You don't put the money and say, oh shit, do I buy this stock, that stock, which one's on sale? Time saved there too. Another obvious one, you will sleep better at night. Again, a lot of people hate risk. They don't want to put all their money with 1 or 2 or 10 or 20 companies. They want to put their money over 100, 200, or 300 companies. They want to be secure. They want to know their money is safe. They want to know that someone is looking over their money. And with an ETF, you can sleep. You can sleep a little better. If you don't want to do the research yourself, you'll sleep better with an ETF. Rather than just buying companies and saying, okay, this guy pays a good dividend, screw it. If you're not going to do the research, then ETFs are definitely for you, especially if you want to sleep. I have written down here easier, but I think I said that 1,000 times. Obviously, it's easier, especially, again, newbies. I know it's not fun buying ETFs, it's more fun buying companies, but it's just a hell of a lot easier. And that's basically the pros that I have. I'll just mention real quick. I own about, I think, 4 different ETFs. Because, I think it's good. I own individual stocks as well, about probably 30. So I own both. I like to get involved with both. Some maybe one way or the other, but I just wanted to mention that in between the pros and cons. Now to the cons. Obviously, there's fees, like index funds that are in your 401k. ETFs are managed, so someone's doing work to make this ETF function, right? They're not just buying companies and leaving it alone and letting it move on. They're managing this daily, weekly. Well, you hope, but they should be managing it that frequently, tracking the companies, making sure the ETF that you're investing in is doing what it's supposed to. If it's supposed to be in this sector, it should be getting the good companies in that sector. If it's a high yielding ETF, it should be getting, again, the safe companies that have the highest yield. So you have to pay fees if someone's doing work. So that's a con. So if you're willing to do the work yourself and invest in individual stocks that pay dividends, you don't really need an ETF if you don't want to pay the fees. Although the fees are low and you don't even feel them, I don't know. It's up to you on that. One thing I noticed on the dividend paying ETFs is the yield is a lot lower than I guess the higher paying individual stocks. Great, I'm stuck in a red light. People can see me talking to myself. So, like I said, the yield is not impressive. You'll see 2-3% on an ETF. So that'll be your starting yield. So, I mean, again, if you want a sexy yield when you buy an individual stock, and you can get a 5%, 6% starting yield on probably a decent company if the stock price is low. But on ETF, you're not going to really get that opportunity. You will get an opportunity to have a higher yield on cost, but that'll take a year or so. Years down the road, those ETFs will grow with the index funds or companies that it's a part of, as does the stock market typically. So yield on cost will go up, but starting yield will not be too impressive. To me, this is really bad, which will probably make me stay away from ETFs in the long run, and it's the inconsistency on the dividend payments. Again, the ETFs are spread amongst hundreds of companies. So, out of those hundreds of companies, someone is either not paying a consistent dividend, cutting their dividend, raising their dividend, getting rid of their dividend. And when that happens, your ETF dividend is cut, is minimized, or it could go up, vice versa. You'll notice each quarter your dividend that's coming from this ETF is very inconsistent. But when you're trying, again, if your goal is like mine, to live off these dividends, you would like some consistency. You need to know what your paycheck will be. You can't be having this fluctuation. It's like working off commission. I did crappy, so this and that. I did good. It's this, it's this good. You need a comfort level. You need consistent income. Some of you may like that. Some of you may not care. Some of you are willing to take that risk. But consistent income is key to me. So that's a huge con. I need to know what I'm getting paid each quarter. For what it's worth, the ones that I do have, the dividend paying ETFs that I do have, the ups and downs are not that substantial, but again, as your capital goes up, it could become pretty substantial. Another con about owning dividend paying ETFs is, as I mentioned, for the pros, less risk. For the con, obviously, less reward. So when you invest in an individual stock that pays you a dividend, you're investing in that company because you trust that company. And if you made the right choice, that company's stock will go up, hopefully substantially in the next couple of years. So there's opportunity there to have huge capital gains. Again, we don't care about capital, but I'm just making a point here. With less risk, there's less reward. You will not see the huge capital gains that you could see on an individual stock should you do the research. So just know that, when you're investing in these ETFs, there's going to be less reward. Less reward on the capital gain, and as I just mentioned before, less reward on the dividend increases. Because again, if you invest in an individual stock, some of them will give you 30 to 40% an increase for the annual raise. If you get that on an ETF, well, you're not getting it on the ETF. You can get it on one company within the ETF, but it's going to get averaged amongst the other hundreds that are sure as hell not doing that. So again, less risk, less reward. So that's a con, especially if you want to pay attention to where your money's going. Traffic is freaking annoying as hell. School's back in session, so the video's gonna get harder to make. And last con, at least in my opinion, is it's not as fun. Again, I'm a newbie. I'm less than a year into stocks. I'm learning as I go. I'm sharing my journey on YouTube. I'm hoping people people are interested in hearing from a newer person who's trying to learn and share as he goes. But to me, ETF is not fun. What's fun to me is investing in companies that I know, that I like, that I think will do well in the future. It's fun seeing news on the companies. It's fun reading about the individual companies. Is it more work? Obviously, but at the same time, it's fun, especially when you're learning. You need to learn, like, what would make the stock price go up and down on a company? Can this company afford to pay their dividend? Can they increase their dividend? When you're doing an ETF, that pays a dividend, you don't really do anything. You just buy the ETF and you wait for the dividend. That's it. But I don't know what the fun. I guess you could check. Okay, what is the majority holdings of this ETF, and then I can track those companies. But the percentage, if you look, is not going to be big enough to make you excited. When you have 100% of your capital in one company, that makes it fun. Again, if you're any type of gambler, or not even a gambler, if you're any type of believer in a company, it's just fun. You want to track the company. You want to see how well they're doing. So, I don't know. That's my last con against the dividend-paying ETFs. Anyway, again, my channel is geared towards my journey on my dividend investing stocks and how I plan to live off of them forever and ever one day. Then I can retire and make videos all the time. Then maybe I'll get more views. Anyway, I'll cut it off here. This video was per request on one of my Instagram page followers. So if anyone else has a request for a video, please comment below If anyone hates this video, please comment below. If anyone loves this video, definitely comment below and hit like. If anyone wants to hear more from my ugly face, please subscribe. And thank you for watching, if you're still here. Peace.